Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Whenever you find yourself on the side of the majority, it is time to pause and reflect. The single biggest problem in communication is the illusion that it has taken place. There is nothing so useless as doing efficiently that which should not be done at all. The 9 most terrifying words in the English language are, "I'm from the government and I'm here to help." For every complex problem there is an answer that is clear, simple, and wrong.
Big Tech is writing $380 billion checks for AI capacity. Not because revenues are exploding today, but because nobody wants to be the one who did not build the runway. Markets like Clarity, Amazon and Google spend for cloud profits and get rewarded. Microsoft spends big, but near-term margins wobble. Meta, high spend, fussy payoff, Wall Street panics. This isn't irrational exuberance yet. It's a prisoner's dilemma with GPUs. Everyone must spend, even if returns arrive late and unevenly. Capex is certain, payback is optional. Everyone talks energy transition. Markets talk market cap. At nearly $7 trillion, oil and gas remains one of the world's biggest power clusters. Saudi Aramco alone is worth more than most tech sectors, while Exxon and Chevron reminds us that scale, geology and cash flow still matter. State-backed champions plus Western super majors dominate because energy volatility rewards balance sheets, not buzzwords. When prices swing, size becomes a strategy. Fossil fuels may be unfashionable, but they are still systemically indispensable. While most of Asia is booking a tourism boom, India and Thailand are the exceptions, and not in a good way. Vietnam, Sri Lanka and Malaysia are growing fast, helped by easier visas, cheaper stays and smoother infrastructure. India's problem isn't demand, it's friction. High hotel costs, patchy infra, and tougher logistics make travelers choose alternatives that they feel are simpler and offer better value. Tourism is a price-sensitive export and Asia is competing hard. When travelers have options, convenience beats heritage. This is not a race anymore, it's a ladder. Make My Trip sits comfortably on top, miles ahead on gross bookings and scale. The real fight is below. Exigo and Cleartrip are elbowing each other for a second, while Ease My Trip and Yatra wrestle over relevance in the fourth. In platform businesses, size compounds. More users mean better deals, better visibility and lower costs, which makes it very hard for the middle pack to break away. Travel tech doesn't reward elegance, it rewards volume and survival. Foreign investors sold 110 crores of Indian equities every trading hour this year. Relentless, methodical and global. India, Canada and South Africa topped the sell list, while money rotated hard into the US, China and Japan. But here's the twist that matters. Markets did not crack. Domestic institutions bought nearly 510 crores an hour, quietly absorbing the shock. India's equity market is no longer hostage to offshore flows. Locals now set the tone. Foreign money is tactical. Domestic money is structural. That's a regime change. Global market cap just hit $147 trillion, growing faster than GDP for 2 decades straight. That's not a bug, it's a system working as designed. Financial wealth is no longer a shadow of the real economy, it's overtaking it. Equities now dominate household assets because profits are global, scalable, and endlessly securitized. The old idea that market cap cannot exceed GDP? The data says otherwise. Well-run capital markets turn growth into claims, and claims compound. There's no hard ceiling on equity wealth, only institutional limits. India quietly did the hard work. Corporates cut leverage, banks cleaned balance sheets, and households stayed relatively restrained. Compared globally, India's debt profile now looks remarkably conservative. Markets rewarded the discipline. India got re-rated as risk premiums compressed. But the job isn't finished. With peers like Vietnam borrowing cheaper, India's 10-year yield still has room to fall, especially if real rates ease and growth stays steady. Fiscal sobriety doesn't make headlines. It lowers the cost of capital, and that's where the real compounding begins.